Yo, what's going on? This video is going to be over internal range liquidity to external range liquidity and basically their relationship, right? So what is internal range liquidity? Well, this is going to be in the form of fair value gaps, right? This is our bearish fair value gap right here. And then we have our bullish example right here. And then on the other side is our external range liquidity. This is going to be in the form of buy side or sell side. Fairly simple. It's two things. A lot of people like to say internal range can be order blocks, mitigations, or really just any imbalance. But I feel like that adds confusion. And to keep trading as simple as possible, you really just want it to be fair value gaps. That's really all you need. A fair value gap targeting one side. Fairly simple. And yeah, keep it like that. So down here you see market only does two things, and I'll go over examples showing this, of course. So we are seeking to rebalance a range in the form of a fair value gap, giving fair value, or we are reaching for old highs / lows. So we're either seeking liquidity or offering fair value at all times of the market. I believe there is a third one, and it could be considered generating liquidity. But for the most part, you just want to focus on these two. I'm just going to show some in-chart examples so you actually know like what is the relationship between IRL to ERL. Now this is the daily chart on NASDAQ. Obviously, this is our IRL with this daily gap here, and where does it distribute to? Well, ERL here, and then ERL all the way over here. You can mark out some ones over here. And then you'll notice once we create IRL, after taking all this ERL, we create IRL, and what do? We go into that IRL. Now I bet there's like a weekly gap or something that it hit. Yeah, so we'll use the weekly as well, right? So we took weekly ERL right here. I'll mark out that low for y'all in just a second. So we took this ERL and opened up this IRL. So it's just a never-ending cycle. Now it won't just be constantly, right? Markets change. We'll have different outcomes. Sometimes an IRL won't distribute to ERL, but that's just on bias. There could be an SMT at the high, or maybe we're just bearish and we inverse a bullish gap. Like there's no guarantee. Just in the same way that a model is not 100%, IRL to ERL is not 100%, but it does give you a pretty strong, I'd say like tool for finding a bias. If we're inside of a key IRL zone, such as a weekly fair value gap, you would expect it to do what? Go to a key weekly ERL, or just this is really just like imbalance to liquidity, right? Liquidity imbalance cycle. You've probably heard of sweep of liquidity. That's literally it. You're sweeping liquidity and then you're targeting an imbalance and vice versa. Now, I personally prefer imbalance to liquidity because it's more on the continuation side of things. So in this scenario of IRL to ERL, if we go up, after we sweep ERL, to catch this IRL, we have to take a short, or in an opposite scenario, it would be a long. So you're essentially shorting at the top, targeting this IRL. I'm not confident with that. I've tried this. I've obviously tried both ways, and I've just found that IRL to ERL is so much more, it's just so much cleaner. It's obviously a continuation focused, which is my like whole model. Like continuations make trading easier. Of course, I'm going to be on the continuation sides. It is easier for me to long this gap or wait for a confirmation off of this gap and then target this ERL. That's just how I approach it. But let's go ahead and show some examples. I'm going to do a full breakdown from high time frame to low time frame using just IRL to ERL. I'm not going to use SMT other than the entry model, but this entire analysis will be IRL to ERL. So as I just said in the previous clip, I prefer IRL to ERL rather than the opposite of ERL to IRL. So this is our IRL, right? We have a daily opening gap. It could also be deemed as a fair value gap. I kind of treat them the same just because it's a gap rather than like an order block or a mitigation. Like I do put them in the same category. So you're going to see London went up, manipulated into this IRL, and what did we leave? Perfect liquidity or external range liquidity below. So we have all these lows and we have high time frame IRL. Now, you may say, oh, Ronan, but there's this gap right here. Would you not expect this to distribute up here? This is where drawn liquidity comes into play, where we just broke structure. I don't really use that, but we did break structure down here. We gapped below, and we clearly are not delivering bullish at this current moment. Had we been bullish, it would have been way over here whenever we had this huge run up, and we're invalidating all of this. So I'm not really expecting this random 1 hour gap to completely change market sentiment, especially after we inverse this one. Now, I'm not really going to go into all the time frames, but if we were bullish, we probably would have held this after sweeping all this liquidity, and we didn't. Not to mention the liquidity that is below this gap is very weak. It's relatively equal lows with bearish sentiment behind it. It's just not a gap you would want to long, and it doesn't even give an entry as far as I'm aware. So this is a trade I took. If you watched my previous video on my model, you would have seen this, but again, IRL. And now I'm not taking a trade off of this 1 hour. I'm going to go more low time frame, right? So this 15-minute gap is my IRL. Now, a lot of hindsight here, but I did execute in real time. So that's why I'm, giving myself a pass. But you'll notice, okay, what are we doing right now? We tap into IRL, we leave external range liquidity. I already said a high time frame we're bearish, so I'm not looking for this IRL right here to deliver higher. And this is our 1 hour gap. I'm gonna go ahead and delete that. I'm not expecting this to deliver higher. There's always gonna be a bias for both sides. You have to pick a bias, but you can use this to help you. So we have our bearish IRL up here, and now we have our low time frame IRL, or mid time frame, and it is the 15-minute. And all I'm looking for is an entry. So what do? We have, now this is where the SMT comes in play. We SMT at the top. We sweep liquidity, right? What is my model? It's just like this. Inversion right here. We sweep the high. What do? We sweep this high right here. This is our gap. Now, we did have an extra little Lego manipulation up there, but that's perfectly fine. It was an SMT. And then you short at this gap. Stop was like up here, entry right here. And what am I doing? IRL up here. All right, I'm trading high time frame or mid time frame PDAs or IRL, and I'm using a low time frame confirmation such as displacement, inversions, changes in the state of delivery, and I'm doing what? Targeting ERL. So we'll just see how this plays out. I've already seen this trade, so obviously it ran a TP. I really like this trade. This is A+. Obviously, I put it in my previous video, but I'll show another example for y'all. Okay, for this example, I'll start on the 4 hour and just kind of explain my approach. This is a trade I nearly took, but I will show y'all why I didn't take it, but I obviously watched this live. I just didn't execute. So 4 hour, we are clearly bullish, and I'm expecting us to just continue this trend. What does this look like? The exact thing I was showing earlier. Retrace into IRL, expand to ERL. IRL, expand to ERL. Same thing here. That's what I'm expecting. Now, are we very premium? Yes, but in a trend like this, we can just distribute, and I'm also not fully expecting this high to get taken. I'm just getting my piece of the pie. Like, I'll follow the trend for like maybe 40, 50 points, get my piece, and get out. I don't need 100 points, 200 points up this high. I just need 50 of it or a small reaction, and then I get my trade. So high time frame, I'm bullish off the trend, but then the 30-minute is where this execution comes into play. So I was on a call with one of our friends, and we did call this out live. Like I said, yo, this 1030 model is about a smack because we took external range liquidity, and I'm bullish, so I'm not taking this reversal here back down to this IRL. But if I'm bullish, we swept this low, we leave a good gap. It's in a discount. Yeah, discount of the range, internal range liquidity. I'm gonna wait for for a trade off of this and try and catch something. So let me just go and move forward to when it actually happens. Right, we dig into this IRL, we sweep some lows right here, here. So that's our liquidity or stop hunt. And then I think it happened. Yeah, right here. So thing I mentioned in the last trade, I want displacement and I want a low time frame confirmation. If this is my 30-minute IRL and this is my 30-minute ERL, remember, so this is the high that we swept prior. We left this, retraced into IRL. So these are your two things that you're focusing on: internal range to external range. And you don't just trade one to the other. You don't pattern trade it. You will lose that way. You want to pair the high time frame with the low time frame. And I do that by basically using confirmations like displacement, inversion, change in the state. I literally said this in the last example. I'm just emphasizing that. Now, the reason why I didn't take this trade is because we close at the gap. You'll notice this low of this, the high of the fair value gap, but this low that creates it is 20,045.75. And we close at 20,045.75. So we close at the gap. We didn't invert it. We didn't get like an actual entry confirmation, but nonetheless, it's a great example. And this happened this week. This is why I'm wanting to use it rather than going like 2 months in the past and giving an example, right? So the trade example, the trade played out like this. We have great engineered liquidity. So even if we don't take this full range, I can TP at like here, I couldn't go there because it's not a one-to-one, like here, this high, or there are exit points, there are break-even points. It's a great trade. I gave this like A+. I think there was an SMT at this low as well, but correct me if I'm wrong. So buy right here, even though this isn't an entry signal. I wish we inverted the gap, but we didn't. And then next candle, right? This is why displacement is so good, because that next candle is likely to do the same if your bias is right. Maybe a little bit stalling and then we go. But this trade played out. Yeah, there was some consolidation, but perfect, right? 30-minute IRL, 30-minute ERL, and we blow through the highs using what? Displacement. Really great trade. It actually showcases a little bit of both cycles, right? Sweep this high. Oh, I did not draw that right. We sweep this high, retrace into IRL. What do we do after IRL? We take the high. The exact model looks like this. So we came down here, swept the high, went back into IRL, swept the high. So after sweeping this ERL down here, what did we leave? IRL. We retrace into IRL, take ERL again, validate this, take this ERL. What do we do? Retrace into IRL, take this ERL. I know it sounds like really confusing. I'm saying it over and over, but this is a cycle. This is what it is. It repeats. So yeah, that's the video. Few takeaways for y'all. I really don't want you guys to start pattern trading this. So basically, how do you avoid that? It's 100% without a doubt adding logic. So go to that first trade example that I showed. It's honestly a pretty good basis for not pattern trading. We had that 1 hour gap and obviously that 1 hour ERL that I could have traded off of, but I used logic to find a better entry. What I did for that was obviously the trend was going bearish. We weren't delivering bullish. Disrespecting versus respecting is a great basis. I'll go over that in my drawn liquidity video. But yeah, pair this with low time frame confirmations like inversions, changes in the state. Of course, displacement is going to be your best friend. And yeah, not really much else to add. I guess focus on, like my advice would be focus on IRL to ERL rather than the opposing ERL to IRL, because that continuation focus will really help you get that win rate up and just like not really confuse you. Reversals will never like be the better model in my opinion. That's why anyone that uses reversals has a low win rate. Guess what? Because they're trying to fucking reverse a range. But yeah, so that's the video. I do have some plans for drawn liquidity being next, or I might do SMT. But I will obviously keep y'all posted on that. And yeah, I hope y'all enjoyed and stay posted for the next one.